Recently, we published a piece on finding the next Tesla and talked about how, at least according to ARK Invest's Monte Carlo models, Tesla's profitability, half of it will come from robotaxis in the future. And that remains to be seen when that service offering will debut. But it brought up this topic of autonomy and what a great opportunity it is to make some money. Now, autonomy is definitely in early stages, and we wanted to explore some of the stocks that we're aware of. We've done a piece on LiDAR, and then we also did this piece about a year ago on 4 self-driving semi-truck stocks for investors. And that beautiful Peterbilt that you see in the picture there, I think that is located in Finland. Well, here in the US, we have about 3.5 million truck drivers that make about $48,000 a year. 90% of those are men, which is why you see a lot of female activists advocating for equality in the trucking industry. Actually, no, you don't. I was thinking about something else. So if you can eliminate the need for a truck driver, there's now a large shortage of truck drivers in the United States because a lot of people don't want to work those sorts of hours. It's a very demanding job, and the pay isn't all that great. So they're looking at enabling trucks with autonomy. And this chart here is taken from a company called TuSimple, one of the 3 we'll talk about today, that shows the different levels of automation. So this 3rd level is right before 4, which is what everybody wants to get to. That's when you don't have to have a driver. They call that driver out. So the goal is to get to driver out so that we don't need to pay truck drivers anymore, and that the trucks can move themselves around. So we're going to look today at 3 companies, and these 3 listed here today, Embark, TuSimple, and Plus. These are 3 publicly traded stocks, well, 2, because Plus didn't actually go public. So they were supposed to merge with a SPAC. That never happened, and they're now a private company. And there was some speculation around that as to Plus operating in China and that they were more of a Chinese firm, and they were going to be subject to some of those new rules coming out of China about cybersecurity and whatnot. But be that as it may, we have Embark, TuSimple, and also a company called Aurora that went public via SPAC as well. TuSimple actually did a traditional IPO. So when we look at the 3 stocks we're going to talk about today, you can see that Embark is very small. That's now below our 1 billion market cap threshold. We have TuSimple and Aurora. All of these stocks have lost a great deal of value since they had their IPOs. When it comes to Embark, they're now facing a potential delisting. And it's good that we looked into this because a fair number of SPACs now will face the same problem. Delisting rules differ based on what exchange you're trading on. So Embark trading at less than 50 cents a share has triggered a notice for NASDAQ. So I think they need to trade at less than 50 cents a share for 30 days. NASDAQ sends a notice and says you have 180 days to regain compliance. And that would be when a closing bid price for Embark's shares is $1 or more for 10 consecutive business days. So then the company probably needs to do a reverse split or hire some investor relations firm to pump it up. But this is not a good thing. And Embark, they have a fleet of 18 trucks that they've leased for testing. And that's rather a shame that they don't have a partner who can provide them with some trucks to work on, but they have to lease their own. They have 14,200 cancelable reservations. And that's the last time in this presentation you're going to hear us talk about cancelable reservations. Those and $3 maybe will get you a Big Mac at McDonald's these days. So these SPACs all came to market talking about how many reservations they had, and you read the fine print, they're cancelable, they mean nothing. So Embark has 244 million in cash. They burnt 70 million in cash flow for 2021. That's about a 3-year runway. And you know, when you look at all the news events for 2022, You know, you see the CEO gave up his salary to provide a grant for girls in Afghan to develop robots. And you see that they have more partnerships announced and all this planning to plan. What we're looking for is tangible traction in the form of revenues. Now, the closest thing they have to that was what they call this truck transfer program, where they take one of the trucks they're working on and hand it over to Knight Swift. And then Knight Swift is a transportation company that then begins maintaining the truck and dispatching it. And actually, there's several trucks I think they handed over. And essentially, it's a pilot program. So if you look back at Embark's SPAC deck, they're magically expecting this $867 million to materialize in 2024. Does anybody think that's going to happen? It's hard to see that happening, but hopefully this very small company can survive until then. I suppose maybe they'll be able to start generating some revenues, because if you have to raise capital, especially after you made promises like this, your current investors and potential investors are going to view you with a lot of skepticism. So that's Embark. And around the time that these companies were having their SPACs, there were a lot of beautiful decks. And look at this picture. This is a gorgeous truck. It's got some light bar there with all the autonomy hardware tacked onto it. This is a company called TuSimple, and they went the traditional IPO route and raised a whole lot more money, about $1.35 billion at an $8 billion valuation. Well, those same shares now trade at a discount of nearly 79%. But the good thing is they have $1.2 billion in cash on their books, a runway of about 11 years at their current quarterly burn rate of $110 million. Now, two of their co-founders recently exited. That's not a good vote of confidence, but they do have some revenues, and this is important to note. So when we look at their revenues, and you can see that they're increasing, the first thing we'll note here is the cost of revenue. And it's quite funny when you look at how they describe that in their filings. They say, you know, that what they're doing here is they're essentially providing trucking services for other companies. And they talk about the costs to do that. It's fuel, drivers. It's like, well, isn't the whole point that you're not supposed to have drivers? So they're essentially doing what that helicopter firm is doing. I can't recall the name of them, but they're starting to set up some routes, and then eventually they'll move from having pilots or operators in those vehicles to not having operators. And until they do that, they're not apparently not even able to operate a profitable trucking business. So they'll need to do that in a hurry. This is what's called TuSimple capacity. And the idea is that once they develop this autonomous truck, they can then charge a per mile freight rate and start offering this, let's say, transportation as a service to other firms. So working with two other companies, Navistar and Trayton. I'm not familiar with the latter. These are presumably transportation companies. And this, you know, they also have another business model where they'll allow firms to license their technology. And the point is, for investors in TuSimple, just pay attention to those revenues. And what you'll want to see is the costs decreasing over time, because then that will show that they've been able to start using autonomy and moving goods that way. And that's very important in order for this business model to be economically viable. So that's TuSimple. And then the other firm that we're going to talk about today is Aurora. Out of the three companies, they seem to be the most compelling. So in January of last year, they acquired and integrated Uber's self-driving unit. In February, they announced this long-term strategic collaboration with Toyota and Denso, a large auto parts manufacturer. And then the month afterwards, they were selected by Volvo to provide level 4 autonomy functionality for Volvo trucks in North America. And that's quite exciting. These are two very big partners. They have somewhere around 1,400 engineers working on this. Now, the Toyota partnership is actually for robotaxis. This is an article from March of this year talking about how they've unveiled this fleet of autonomous Toyota Sienna robotaxis that will ply the streets of some Texan city. And they're now competing with the likes of Cruise and Waymo that are both accepting paying passengers now. So there's that. And then, of course, their work they're doing with Volvo. Now, they are burning a lot of cash, as you can imagine. The 1,400 employees they have on payroll in product and engineering are certainly contributing to the losses of 755 million they saw in 2021. So if we take the 1.6 billion in cash they have on hand, that's about a runway of 2 years. They were able to receive about 150 million in partnership payments from Toyota. Very important to, when you see these firms start registering revenue, dig in and see where it's coming from. So part of that Toyota partnership was this $150 million in payments. They had somewhere around 84 million that was recorded last year. The rest will be recorded this year. So while it looks like they're gaining traction, it's just these partnership payments from Toyota. That said, it's great to see Toyota actually plunk some money down. It's great to see this recent press release from Volvo talking about how DHL is coming on as a key customer. So it seems to be that they're making progress. But what you also need to remember is that firms like Toyota and Volvo aren't just working with Aurora. They're working with lots of firms, and they're only one senior management person's decision away from the program being scrapped. So it's a double-edged sword. Investors in Aurora need to use one simple metric to measure progress. In any of these companies, it's revenues. We need to start seeing revenues, and they need to have margins that show they've built a compelling platform. And that was a point made by the CEO of Locomation. This is a firm that's building functionality that allows rigs to travel in a convoy. So you can see there along the bottom that there's a driver in that first rig, and the one behind it is automatically tied in, and they kind of navigate like a train, more or less. But this gentleman was talking about how the ROI on this platform is somewhere around a year. And he said that if you develop a $500,000 autonomy solution for a semi-truck, it's not going to be economically viable. So that says two things, really: that just because these firms are investing a lot of money developing this hardware, it doesn't mean it's going to be cost effective. And two, the business model is very important. So we did a piece on Uber for trucking. I'll include it in the comment section of this, or say the description of this video, along with the research piece that went into producing this video and several others. And you can read about the Uber for trucking business models that we've covered before. There are also a lot of startups that aren't publicly traded companies working on autonomy for trucking, not to mention large truck makers. Both Volvo and Toyota have in-house autonomy efforts going on. So, and Daimler, I believe, is quite a formidable competitor as well. So just to conclude, out of the three firms we've looked at today, Aurora is probably the most appealing. They have focused partnerships, so it's Toyota and Volvo, unlike Embark, which seems to be partnering with everybody but not mastering anything. And they have partners that are showing some initiative, so they've got a decent chunk of cash to try and survive before they need to raise more. And the key to raising more money is showing that you made a lot of progress and you were able to keep your promises. So far, none of these companies are showing real traction, and real traction is one thing: it's revenues. And we're quite surprised that long haul trucking is taking so long to progress, because you have robotaxis operating in streets now. That's a lot more sophisticated, it seems, than having a semi-truck driving down a dual lane highway. So we're surprised that more traction hasn't been made in long haul trucking, especially when you consider the driver shortage. And then, of course, investors need to consider private companies as well, because they're certainly making progress as well, some which may be flying under the radar. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this video today.